Everyone, welcome, welcome, welcome. We are back. I'm back in my home studio. Our summer break is officially over now. We are back with our weekly recaps again. Peter's going to go first. I don't have a lot. I'll explain why here in a second after Peter goes. But we miss you all. We love doing these every week, and we hope you love receiving these every week. Give us some feedback though, wherever this video is posted, whether you want us to continue these videos or whether you want us to do something different. So with that being said, let me go ahead and turn the floor over to you, Peter.
Okay. Thanks, Travis. And yeah, welcome. It is good to be back doing the weekly recaps. And before I forget, if you guys like what you see, make sure you hit that like button, give us a thumbs up. If you're not subscribed, subscribe because you'll get notifications when we come out with not only our weekly recaps, but a lot of times Travis will put out some golden nuggets. So you'll get notifications of that if you're subscribed to the YouTube channel. So, and yeah, give us your comments. Let us know. And you know what? We always say, give us your comments and stuff. Let us know what you're doing. You know, if you guys do this stuff too, let us know what you're doing. Tell us what you think works or what doesn't work, you know. So with that, I'll just go ahead and jump right into it. Last week I talked about possibly getting into an Apple trade, and you can see that weekly green trade triangle was right on the money, right? It's going up. It did kind of do what I said it was going to do. It got up to that 230 and it crashed back down, but it looks like it would have been a profitable trade. I say would have been because I didn't place a trade. I decided not to pull the trigger on an Apple trade. I just didn't feel like I wanted, I really didn't like the way the chart looked to me, so I just didn't do it. So if any of you guys did it, using the Market Club template, it's probably going to be a profitable trade for you. So kudos to you guys if you did it. Coca-Cola, I got out today. It gave us, or yesterday actually, I think I got out, because yesterday was the weekly red. That was when it triggered yesterday, so I went ahead and jumped out of it. I'm going to manage Coca-Cola a little bit different when I go back into these because of the way their credit spreads work, and I'll talk about that when I get into the next one. I'll talk about how I'll manage it. Just a little bit different. I'll kind of tweak my system that I use for, or that we use for getting out at an 80% credit profit. So, but I'll talk about that. I talked about this last week. I consider that a losing trade. I didn't lose any money, but this is one of those stocks that when you trade it on credit spreads that I'm seeing too, will test your trade plan and because your emotions get involved here. This was a trade that was 2 days ago. If I had closed it out, would have been a $2,500 profit. I closed it for a $700 profit. So I didn't lose money, which was fantastic, but it was kind of difficult yesterday a little bit watching my trade go from $2,000 profitable to $700 profitable. And then when I saw the weekly kick in, I was like, okay, we're out of the trade. So we did get out of it. And then Walmart is, oops, I don't have Walmart up here. Where's my Walmart? Let me pull up Walmart, because Walmart's the other one that I'm still in. It triggered a daily red, but it has not triggered a weekly red, and that would be my exit. It's got 31 days left to it. So if it triggers a weekly red, then I'll go ahead and exit it. Right now it's like in the, like a 6% profit range. So you can see it's just been kind of, you see those dailies just coming in and out, in and out. This is why I don't use dailies usually to get out of my trades. When I'm using the Market Club template, I like to use the weeklies. The only time that daily would get me out of a trade is if I'm in the trade and it's got a couple days left. Then it's probably smart to use that daily red, but otherwise I don't use it. SPY, I'm still in SPY and it's all green across the board, which is good. So I may be fortunate that my SPY trades, these were part of my price point profit trades. I was exiting on a red monthly for the longer term ones. Once it got into that 30-day range, now I'm waiting for a red weekly. So if I see a red weekly, I'll get out. But it's getting close to being out of the money for me. So I may see my 80% profit potential. And if I see that, then I'll be good to go. And if that happens, I'll most likely, if SPY is still going up, I may take on some new positions. But like I said last week, I'm going to be very cautious because October is not usually a good month for me trading. I don't know why. Sometimes it is, but I don't know. I get either lazy or stupid and I don't do so well. So I'm going to take it a little bit slower. Leading into the end of the year, I'll take what profits I've gotten. My profits haven't been earth-shattering, but they've been profits. So something, if you look at the overall general market, some people can't say that. So I'll take it. But that's it, Travis. That's all I got.
All right, buddy. Speaking of KO, I'll take your place any day. Peter's KO Coca-Cola trade was a profit. I was like, oh, you poor little thing. I was like, you get $700 profit. I'm like, think about it. I was like, somebody was like, give me $700. You know, that's my car payment for the month or groceries for my family. Well, Peter's KO trade is at a gain. Mine is actually at a loss. And that leads to, before I show you the screen, actually, I don't really have, well, I'll show you the screen towards the end, but that's what I was going to lead on, is that I don't have much. I just got back into my office. I haven't even really downloaded all my trades and updated my Excel yet. But as I told Peter before we started recording, I'm having a hard time adjusting to a new reality in my personal life. It's so ironic. It's a beautiful thing, a house filled with love and laughter, and I'm having a hard time adjusting to it because it's a house that's really filled like with a lot of people all the time. And I didn't realize how much I like just quiet and zen and being by myself to think a lot. So I'm having some trouble adjusting to it, the schedule and things like that. So I'm actually been working on, and KO is the reason I'm saying all this is because I realized with KO, Peter realized, oh, it has a red weekly. That was the first I heard of it. Why? I didn't even bother pulling my charts because I'm dealing with so much other stuff in my personal life. I'm like, gosh, I'm getting sloppy in the thing that really matters. And that's actually, earning the money to pay these bills. So I'm going to work on scaling back all of my active trading that requires me to sit at a computer, pull up charts all the time, focus more on the one stock blueprint, and then focus more on set and forget it strategies. Like one thing I did while I was on vacation, I was in Walmart. At 200 days left to expiration, profitable trade. I could have closed it out, but I was like, what if we have a pullback? I don't think it'll have time to recover in 200 days, right? Because the pullback, when the market corrects, matter of fact, now let me show you my chart. So when the market generally corrects, oops, I don't want to show you screen number 2. Do you see wrong screen? Ah.
Yeah, that's a beautiful picture.
Oh, thanks. Gosh.
Is that your backyard?
No, that's actually somewhat what it looks like, minus the river. Let me show you clean. Okay. All right. We have mountains. Yeah, we can look at our backyard. You see the mountains because we're in the valley. Okay. Yeah. Now you can see my charts.
Yeah.
Okay. So, all right. So when the market corrects, let's look at 2018, and then it doesn't matter when 2018, we look at around January 2018 where I'm circling my mouse. When the market corrects, what you can do is you can do it like a line or just use your mouse and you look at how long a market takes to get back to where it's at. Usually around 6 months, give or take. So 6 months will be 180 days. So if Walmart went through it, that's the general market. Stocks, they could correct and stay down for a long time. Basically, the summary of my long-winded rant is I wanted to buy myself time in case the market went to a correction. So I closed out my Walmart trade, my 280 days left to expiration, and I bought an option that had longer, like 300-400 days. So I don't have to sit. I don't look at it anymore. I don't really have to. I can go a week or so without looking at the chart, and it really doesn't harm me that much because I have such a long time. So I'm moving more towards long-term investing and not like the active trading where I have to sit in the market every day because, again, my personal life is just it's an adjustment right now until we get our new schedule. Our new reality gets kind of routine. It's not routine anymore. It's more chaotic. And so that's affecting me. In a case in point, KO, I didn't even realize I had read weekly today. So I don't want to be losing money because of my chaotic personal life. So I'm going to be scaling back to focus more on the one side blueprint. Now, as far as the general market, now I have a 2-year chart going back here to the big three. Is Peter said October generally is a bad month for him. October generally is a bad month in general for the stock market. A lot of bad things tend to happen in the summer months or towards the tail end of the summer months, September, October, November. You know, you look at most corrections, you look at the market crash of '07, you look at the market crash. Let's pull up a 20-year chart. We can look at back in the internet bubble. When did it start falling? It started falling in when? August, September, October. That's when the market top happened. Now we look at the bear market of '07, '09, when then the market topped out. It topped out in October actually. And then it started scaling back, right? Falling. So these are the months that if there is going to be a crash, most likely would happen around these months. Look at 2018, we had a 20% correction. Now let's pull back up the 2-year chart. And 2018, when did we have a correction? October. I do not want to scare you. Please do not get scared. There's no guarantee that this October the market will correct. It's just something to be mindful of, something to be prepared for. The way we teach in our programs, you should always have insurance in place, either built-in insurance following the 210 formula, or if you have stocks, you buy stock insurance, aka protective put options. There's zero reason for you to worry, right? You should always think risk first, profit second. So that's why it always amuses me when people are like, "Oh, you've scared me now, Travis, what you talked about." I'm like, why should you be scared? Like, your portfolio should be always bulletproof. Yeah, you should be scared if you're not following the risk and our philosophy of risk first, profit second. Even Buffett talks about it. His 2 rules of investing pretty much means manage, how much you lose. So you shouldn't get scared. But that's what I'm looking at. I'm going to see what this next October, these next few weeks is going to look like. I honestly think the market should head up higher from here. We just had a 20% correction last year. The only thing that's going to hold us back is like a Trump tweet. But even then, you shouldn't get upset. You should be a Trump insider, right? It's pretty predictable. He sends a tweet. If it has the word tariff in it, guess what? The market's going to fall, right? That's a buying opportunity for you. When it bottoms out, you buy and ride it up. I mean, it's presenting us with a lot of opportunities to make money. So I'm like, don't get upset, get smart, intelligence over anger. So, but I think the market is going to head up here, but market doesn't care what I think. I'm going to observe it, wait and see. My portfolio is good enough. But just in case, I might buy a couple of extra puts to ride me through October. And then if the market doesn't crash, I can either keep them in place, pay for them with other strategies, or go ahead and sell them just to recoup and get my initial cash back. So that's all I have. Again, I'm just getting back from our summer break, so I don't have a portfolio update, but I will be updating everybody on our Success Academy live call we have in a few days. And that's what I didn't tell you, Peter. I don't know if you watched the last recap. I'm going to open up the Success Academy for the last time this year today. So we finish this recap, I'm going to open the doors. Probably the last time this year, and as we already talked about, Peter, probably the last time for the public indefinitely, because as we talked about, we want to restructure things to walk people up. The same way you joined this program, you started with the basic course, then you moved up from there. It's sort of like you eat a dinner. They don't bring you the main course, they bring an appetizer, drinks, then you get the main course, you finish with dessert. So I actually want to structure the program now sort of like that. People have to start at the basic course before they get access to the Success Academy. And I think we'll see better results moving forward.
All right. Yeah, I like it.
Yeah, me too. Well, everyone else might not like it, but
they will. I mean, that's how I started.
Yeah. It's like you might not like it, but it's for your best interest. So ultimately, you will like it. You might not like the fact that we won't just let anybody join the Success Academy anymore, but you will like the end results and how it's a better learning experience. You're not overwhelmed with like a PhD level program straight off the bat. You learn in stages. So, and I think I see this. People are like, I have a hard time with the cash flow strategy, right? AKA credit spreads. And I think it's because that's where they started versus starting at the basics, getting those down pat, you can pick up the more advanced strategies easier because you're like, I already practiced this over and over again, you know, versus, oh, let me start out here. Something you've never learned. Let's sell something I don't own and profit from it. Where did you learn that concept? That's our reality, though. We sell stuff we don't own and we make money from it. That throws people for a loop, right? If you're completely new to options. But that's what we're doing each week, every month. And on that happy note, I'm going to stop talking. But do you have any final takeaways for everyone?
I don't. I'm good. I think.
All right.
I think you covered it.
All right. Well, give me a sec. Edit that out. All right. Oh man. Anyway, hey everybody. Hey, again, I feel like I have to get back in the routine. I even didn't do my standard disclaimers. You know, everything we're saying is for educational information purposes only. I'm a little bit rusty, but we will be back in the swing of things shortly. So until then, hey, you all take care. See you next week. All right. Bye-bye.